You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Venazzi from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
All right, everybody, that rockin' tune means it is time once again to rock out with your favorite options crew. Yes, it is time for the Option Block. My name is Mark Longo, coming at you live here at noon Central, 1 p.m. Eastern on Monday, the 3rd of June. How do you believe? We're in June already, coming into summertime. It doesn't feel like it here, at least that much here in Chicago, but they tell me on the calendar we are indeed approaching summer. Also approaching some fun stuff in the market. Let's get to it. Helping me break it all down for you this week. Let's see. Let's spin the wheel and see where it lands. Someone told me once they come in the studio and they want to see the wheel for themselves. The wheel is just a metaphor, listeners. There is no actual wheel. All right. Instead, let's see. First up here, we got the father of the last son of Krypton, a.k.a. Trey Jarrell, holding down the Fidelity hot seat this week. Mr. Father of the last son of Krypton. That's a long name. How are things going, sir?
Going well. I think that's why everyone sticks with Trey. It's short and
it's a little bit more convenient. It rolls off the tongue a little easier, that's for sure.
Exactly. But going very well here. Definitely feels like summer in Florida. I can send some of this up to you guys if you'd like. I don't think I recall the last day where it's been less than 100 degrees. So we got a nice early start this year, making the hot seat extra hot.
Yeah, you guys got the death wave down there, right? The crazy 100-degree heat wave. So I guess careful what you wish for, right? We get weird 38, 45-degree weather and kind of sleety rain and mist like the Highlands of Scotland. And then you guys get 100 degrees. So I guess to each their own. Moving on out to where the weather is always nice, and they have a weather shield, so it's good for them. Not so much for us downtown, but out there in the hinterlands is good for them. Mr. Uncle Mike Tussaw from St. Charles Wealth Management. Uncle Mike, how's it going, sir, in the land of the weather shield? Must be nice.
We have a weather shield, and that's kind of a metaphoric thing, but I do wish we had an Illinois tax shield based on what was passed recently. But that's a whole nother story. I digress. But all is well. Things are good, and always good to be working with the meatball. And why don't we make it simple? Why don't we just call him the son of Jarrell like they do in the movie?
That's true. I guess technically he is a son of Jarrell, unless something weird happened over there. I don't know. I don't want to delve too deeply into the sordid family history of the Jarrells, but we've all seen it play out on screen many times. So maybe, this last son of Jarrell. And also joining us, falling off his chair as we speak, I believe we have the greasiest of meatballs, Mr. Mark Sebastian. Mr. Meatball, are you there, sir?
Yeah, I'm here. I got Andrew in the office here with me, too, and Leisha. I got...
Andrew is in the Chicago environs. He's already here.
He's
prepping for the big day.
Andrew has left the land of lobsters.
Wow. Can he yell in the distance so we know he's alive?
Oh, no. Yeah, hey, Andrew, yell in the distance so they know you're alive. Andrew, yell in the distance. They want to know that you're alive.
I'm alive and I'm in the office. There we go. Proof of life. Proof of life that the rock lobster lives. And he does indeed leave the cozy environs of the world's, at least the U.S.'s, #1 option search mecca, a.k.a. Maine. And it's time for us to search out some answers to what's going on in the market. It is time to keep on rolling into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody. It's another good one here to kick off the week here on the old. The good thing we do it on Mondays because fun things happen, or maybe not fun, but market-moving things tend to happen on Mondays and over the weekends a lot these days. And we're in another one of those will they, won't they. Looks like we're in the won't they mode right now, listeners, as the trade war talks continue to escalate to the dark side as well as a few other things. We're seeing many shades of red on the screen today. Of course, we saw, everyone was joking after we expanded the trade war to include Mexico. Who else is next? Luxembourg, others. Well, apparently it's Australia. Imposing tariffs on Australian easy for me to say, aluminium, as the Brits like to say, aluminum. We also have ongoing back and forth with China. They accused us of intimidation and coercion and said we are being exorbitant in our demands, also deciding to go tit for tat, opening their own investigation into FedEx after, of course, we've been targeting Huawei so aggressively of late. All of that continuing to squeeze broad markets. We're seeing Dow's kind of the laggard, actually, only off about a little more than 1/3%. S&P off a little bit more than 0.5%, about 0.6%. NASDAQ really taking the drubbing here, off 1.5%. A lot of this perhaps on the heels of what we got Apple announcing, which is, of course, WWDC, and that's something people are watching. But the market's actually liking that so far, up about one handle. It seems maybe it's just this massive Alphabet Google outage. In fact, if you use anything like G Suite stuff like we do, we run all the Options Insider off of that list. And I can't even use my email. It's so clouded with G Suite and just crowded with G Suite failure notification. This is failing. This is failing. This is failing. I get it. None of it's working. You don't need to send me 800 notices to that effect. But it's just bad enough that the system has issues, but now you're clogging what does work with all of your notifications. So maybe some of that exacerbating the NASDAQ downside, off over 1.5% as we're coming into showtime here. All this red on the screen means VIX cash taking a little bit of an inhale today, up about half a handle, getting us up to about 19.25 or so in that range. That's up close to 2 points from where we were this time last show, listeners. So everyone, we were talking on vol views on Friday. It seemed like everyone wanted, and we're leaning, and we're betting on the immediate erosion. The trade war does not want to let that happen. We're seeing, again, VIX cash still over that 19 handle, and we're seeing our old friend VXX up as well. Over the 30 handle again, up about a quarter, right around, not quite 31, but threatening that range. We'll see if we have intraday range here on the VIX. Let's see, the high we're about almost 19.5, about 19.40, off those highs a little bit. Got down to 18.19 intraday as well, so a lot of back and forth in the land of volatility as everyone continues to price and reprice what's going on in trade war land. Of course, our friend VVIX up, as you might expect as well, threatening 100 now, 96. You all know once you start getting into that range, around 100 or north, that's when things are really turbulent. And we're threatening that level of turbulence right now. Let's go back around the horn the opposite way. I'll spin the metaphorical wheel the other way. Let's go back to the land of the pit. Mr. Meatball, sir, a lot for your pit chat crazies to sink their teeth into from a vol perspective. What is catching your and their eyes today, sir?
You know, it's another day of kind of weird down market and no real excitement out of for protection. VIX is up a little bit, but again, we're coming off a weekend. It should be up more. We've got the NASDAQ down almost 2%, and just no lift anywhere. There is no appetite for volatility, no appetite for premium. Ugliness abounds. I mean, Google is down $75. Vol is up $3. Amazon is down $85. Vol is up $3.5. There is just nobody cares. I don't understand it, but this is really one of the oddest things. We've got a day where the Dow is down 25% of how far down the NASDAQ is. The NASDAQ is down 10 times more than the S&P, and the Russell 2000 is actually green. A lot of what I'm seeing says that, if the market can get any kind of positive news, and Andrew, stop me if you think I'm wrong. If we get any kind of inkling of any type of positive news, we could see a 100-point rally. It'll bounce faster than a 13-year-old in a girl's locker room.
Yes. I was wondering. I was kind of waiting to see where you're going to go with that. And you kind of landed about where I thought.
13-year-old boy or 13-year-old girl?
Hey-oh.
To each their own, Mr. Uncle Mike. We don't judge here on the option block. We just enjoy inappropriate jokes for all. But you're right. It is a weird day. I'm looking at the Russell right now, like through the lens of the IWM. But pick your poison. As many flavors of Russell. Obviously, talk about them on TWIFO all the time as well. And it's up actually a little bit. Not quite. Not a ton. About 0.1%, but still green when everything else is blood red. And the NASDAQ is super blood. They severed an artery. It is one of those weird trifurcated days. Small caps up. Old school kind of Dow, kind of middling. S&P large cap. Mostly down, and then tech-heavy NASDAQ obliterated. It is one of those weird days where you kind of pick your poison, and the results are pretty much as I continue to get hit up by these G Suite notifications. I get it. You're down. I get it. Please stop notifying me. All right. Uncle Mike, sir, same question for you. Old school, new school, silver. What's catching your eye today?
Yeah, I think it is kind of old school, and that markets are down and metals are up as well. So it's interesting. Excuse me. I'm just looking at like the TLTs of the world, flat on the day, and stocks are down. We have financials up. So there's a lot of there's a lot of parts that aren't going to where they are going to go. So I agree with Mark in that if we do get some type of good news in some way, shape, or form, I really could see some type of big rally from that standpoint. The fact that we aren't getting that much appetite for premium, and that the VIX is up. But not as much as the market was down. Whenever you have things to where the parts just don't all seem to be going with the flow of where they usually go, money's going to come somewhere at some point, meaning that if we do get some type of a rally, I could see it happening in stocks, broad-based, of course. But the other thing is that maybe the money's about to go to bonds, and we might get another bond rally, and stocks may go down. That's the other way with which I could see this happening. So a lot of things that are going on. But I think the main news event that everyone's looking at right now, of course, is the trade war. And it's just, this is kind of a wonky day from the way with which different things are moving in places where they typically don't move that much.
Yeah, it's anything sexy going on in the world of silver collars, sir. We just broke it down last week, but I can imagine it's just super sexy today, sir.
Well, the one that we have no upside call premium on, it's very exciting, and that if we do have some type of major upside in the collar that we're currently just long underlying long put, silver goes up significantly. That could be very exciting in the collar world.
That is the definition of exciting when it comes to collars, at least. If you want to go deep into Uncle Mike's silver love and his construction of collars, we just did it last week on TWIFO, listeners. Hopefully you're enjoying that as we speak, or you already have. And hit us up, or hit him up, I should say, over there at stcharleswealth.com if you have any questions about such things. Mr. Hot Seat, a.k.a. the father of the last son of Krypton, a.k.a. Mr. Trey Jarrell. What is lighting up your tape over there? It's a weird day, as Mark alluded to. Everything's kind of doing its own thing, moving to the beat of its own drummers. What do people have on the brain over there at Fidelity these days? What are they slinging?
Yeah, so usually we can come on the list of Fidelity customers and usually find one or two kind of unique names that aren't up there. But not today. It's pretty much in line with the overall markets here. Coming in, maybe start with some more positive news. AMD actually came up second on the list here. Orders traded by Fidelity customers, up about half a point right now. It's come down a little bit from its highs today. Fidelity customers leaning slightly more towards the buy side than sells here right now. But interesting news from them, right? They announced a partnership with Samsung on some new mobile graphics technology. So initial reaction seemed positive of it here. I was looking at the chart here. Last couple of months, it's had some trouble, maybe breaking into this $30 range, and today was no exception. Looked like it might be wanting to get through, but hit that level and came right back here throughout. So we're keeping an eye on it here. This support level, right, maybe around 26 from the last couple of months to the downside, or see if we can actually test to that upside again. Very busy in the options market here on AMD here today as well. About 382,000 contracts right now, but thought it was interesting. A lot of love for the call side. About 265,000 calls to 118,000 puts, with about 98,000 of those calls on the buy side versus 87 off of the bid. So kind of interesting paper there. It looks like obviously a reaction positive and option market. Kind of confirming what we're seeing there as well. So the other one too that popped up behind the list today. I know you guys have mentioned this here a little bit. Alphabet. Certainly a rough go at it here. Service outages over the weekend. You had the Department of Justice report, mentioning that antitrust investigation. So not a lot of positive news on their chart. Really ugly here today, down 76 points right now. Broke through that 200-day average we keep an eye on just a couple of days ago. And looking at the chart, not a lot of support areas left until we get really near our year lows. Right, has this range about 980 to 1,000 on the stock. We had a couple of lows at 980 in October and November, and then at 1,000 and then 980 where it dropped at the end of December. So not a lot of space in between until those levels. So we'll be keep an eye on that as well. And then lastly, wanted to mention Amazon here as well. This popped up number one on the orders by Fidelity customers. So lots of interest here in Amazon. Another ugly chart here today, down 85 points. Here's it stands right now. Fidelity customers actually pretty heavy on the buy side here. They're about 63% buys to 37% sells. So looks like some positive reaction to the negative news here from Fidelity customers. But on the chart too, that same theme. I always like to keep an eye on those 200-day moving averages, and we see breaking down below that here today as well. This 1600 level really looks to be the next interesting one here. This was kind of the bottom of our range throughout January through March before it finally broke up. So a little ways to go there, but that sideways range that had in those months is what's been catching my eyes there as well. But on the option side too, pretty heavy on the calls here on Amazon. 116,000 versus 83,000 puts, with about 18,000 on the buy side. A little bit more, about 19,000 on the sells as it stands now. So I'm seeing some call action in Amazon here, but. Yeah, I wish we had more positive ones to go through, but Fidelity customers today look like they're kind of in line with everything else, and keeping an eye on those big tech names here today.
Yeah, certainly interesting. Amazon obviously getting dragged down by this network outage. I know it's also hitting Snap. That's hitting Google obviously right now. So clearly, AWS may be feeling some of the pain as well. We don't use that as much, so I haven't seen as much of that. We're more on the Google side, but clearly when there's a massive network outage, it does tend to hit all those players in that space. Also seeing our buddies across the street, Boeing, having more issues with defective parts in its wings. That explains the scrambling across the street from our studio here. Big black SUVs pulling in and out. Something's happening when all that fun stuff is going on. Speaking of fun stuff, it's Monday, Mr. Meatball. That means it's time to unleash your option pit stock of the week, shall we say. An interesting choice for this week's stock of the week, sir. I'm just analyzing it right now. It's my old friend, my old stomping grounds here, maker and loser and maker of fortunes, a.k.a. Intel. Mr. Meatball, sir, regale us. Why did Intel come across your radar today?
Well, it came across just from a chart perspective and from a yield perspective. It is now $43.60 as I'm looking at it right now. Where the NASDAQ is in the middle of a bloodbath. This one's only down 1%. It's one of the only major NASDAQ stocks that isn't getting obliterated along with Apple, but it has had the worst 3 months in a very long time. Bad earnings cycle, and then more bad. Implied volatility is at like pre-earnings level. The last time implied volatility was this high. So in Intel, it's about 31%. It was the day before they released earnings last quarter. So it's at a level where premiums are really juicy. And then let's talk about this dividend yield. All right, this thing pays about 32 cents a quarter. So that means it's paying $1.28 a year, which when you divide by 43.60, you're talking about a 3% dividend yield on with relatively impressive implied volatility. I'm looking at trades that maybe seem interesting as a wheel trade. I can collect about $1 for the 43 puts. And if I take delivery, I'm now getting this, a yield that will be over 3%. 3% yield is stuff that we think about with like utilities, right? Exelon, which is the utility here in Illinois. Exelon, the utility here in Illinois, pays almost the exact same dividend yield as Intel. As I'm looking now, which is ridiculous. Thank you. Andrew's in the background. He thinks it's ridiculous too.
Double ridiculous votes. I like it.
Now you could make an argument. AMD has been kind of eating their lunch a little bit. But it's not like AMD's done anything interesting. Semiconductor chips as a whole, there's clearly some value in it, in that we just saw Infineon buy Cypress today, and so. At these lows, there are groups trying to consolidate and buy, and that is, to me, that says, hey, maybe you need to make some effort on looking at some of these semiconductors and seeing if you can find some value there. I just look at Intel as maybe one of the best wheel stocks that we've seen in a long time. Andrew's on board. Andrew, you want to throw in some commentary while you're here on Intel?
Too cheap.
Silence. It's lovely.
It is. Oh, are we muted?
There you go. Well done, sir. You're even on different city, different microphone, and you're still muting yourself.
You know why? It's because Mark rolled over the cable.
Well, there we go. There we go.
So between the two of us, we can find new and interesting ways to mute ourselves.
That's what I rely on for you guys for. Interesting technical issues.
Exactly. So is Intel a cheap stock? Yes. Is it yield ridiculously high? Yes. And you know what? They didn't have any real earnings problems or anything like that. So it's not like the yield's going to get chopped.
And the vol is at earnings levels.
So
that are over a month and a half.
I'm thinking wheel, and I will be wheeling more. I already own some Intel, and I will be wheeling a little more. SPX is down 52 cents. I'm sorry.
Since Andrew started talking, we rallied 10 handles.
That's because I moved the market.
So, anyway, Intel, something is going on. We rallied 12, 13 handles in about 15 seconds while I was handing Andrew the
the dead air on the option block just rallies markets. We were spooking them. Clearly,
are you watching this? It's crazy. Dow's up 100 now.
It's now we're up. There we go.
I know, Mike. You're not allowed to give advice or anything like that. But just kind of when you think about wheel candidates, does the case I made for Intel there, does it seem slightly compelling?
Yeah, it does. What I would add to it, though, just in looking at, as I'm looking at a chart of Intel, as you're going through it, the way that I would play it would be similar to what you would say. I would definitely want to sell a put. If full disclosure, we're not in Intel right now, and it's not part of our strategic night or our triple income or any of our holdings at this stage or any of the clients that I'm working with right now. But what I like about it is very cheap, and I like the fact that you can get into it if you want to sell a put to get into it. But the only thing I would add to it is that once I got into it, I would like to sell call spreads on it just because of the fact that it's so cheap. And I would hate to have this be one of those stocks that you get into and let's say you get into it at the 42 half level or whatever level you get into it at. And then all of a sudden it goes up to $54 in a couple of days or maybe a couple seconds based on what you guys did when you just moved the microphone from Andrew to you.
I know. Well, the power of option pet.
No kidding. I would probably be selling call spreads once I got into it. That would be the only difference that I would have. I think you definitely made a compelling case for it. You're going to get to hold on to a dividend while you're doing it. But if you buy one of those junky calls above the covered call you sell on it, that can really save you a lot of headaches in case it does happen to go up to 54 one afternoon.
Fed's bullard. Rate cut may be warranted soon on trade and inflation risks.
Well, there you go.
There's your rally, folks.
Yeah, the S&P was unched almost for a little bit. Dow kind of up now, actually up a quarter or so of a percent.
Yeah, no, Dow's now up. The NASDAQ cut a little bit of a bid. Between that and, that's the type of news that I think, we could see some interesting trading around.
Speaking of interesting trading, I'm looking here because you're right. Intel, that is a fun one. It's one of my old stomping grounds out there, and to see the vol at these levels with a high dividend yield, those are two of the many components you like in an enticing and juicy wheel candidate. You can make your own dividend yield on top of the juicy, delicious dividend yield you're already getting. How exciting is that, listeners? You can actually get a decent amount to have it come off here. I'm looking here right now. Let's play a really quick guessing game, really quick, because we got to get rolling. Let's look right now. I just pulled up the top positions in Intel. Intel right now is at around a 43 half or so, listeners, off not quite a half a buck, or not even 1% on the day. I'm sure that maybe has even rallied a little bit since we started talking here. But in general, Mr. Meatball, since this is your stock, I will allow you to pick and play the guessing game. If you had to guess right now, what do you think is the size position in Intel? What are you feeling, sir? What's your spidey sense telling you?
I'm going to go Jan 2020 50 calls.
A good guess. I was probably leaning somewhere along longer-term calls myself. The Jan 50 calls are not on the list. What it is, though, and Jan 60 calls are number 2 with about 50,000 open there. Number 1, a little bit closer to home, the June doubles, the June 55 calls, 61, almost 62,000 of those bad boys. Maybe some upside love, maybe some of the old harvesting of the old risk premium, as you're alluding to here, Mr. Meatball. Interesting stuff. So near-term upside followed by a lot of Jan 60 calls. Number 3, the Jan 40 puts. So maybe some of the aforementioned wheel coming in there, people hitting the 40 strike. That's only 3.5 handles out of the money. So there could be a lot of different action out here in Intel. In my old days out there, again, it's been a while since I made markets in it, but in the old days it was just puts bid to high heaven, calls offered to high heaven, and never the twain should meet until some weird aberrant events happened out there. So it was interesting times for Intel. Yeah, this is kind of a weird time for the company. Maybe worth watching here. Let us know, listeners. Are you down with the idea of the wheel trade? Do you like Intel? Maybe you have a different name you think would be good for a little wheeling, a little action, a little fun. Meanwhile, it's time for us to have a little fun of our own. It's time to keep on rolling into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's get to it. Time to get a little odd, a little weird, a little whimsical here on the old Odd Block. Let's kick things off. At least kind of fun, kind of live ones where we kind of just see what the heck is trading. These are some of my favorites here because you're kind of seeing it along with us, listeners. First up on the Odd Block today, Mr. Meatball, you like this one. This is in your wheelhouse because, you think the Meatball, you think ladies' clothing retailers. And that's what we got for you in terms, this is both, but a lot of ladies like it. This is Guess Inc., ticker symbol Guess, GES. Trading today, 1631, actually up a little bit, bucking the trend, up nearly 1% on the day. So a little bit of good times here for good old Guess. Over the past year, let's see, a year ago they were trading a little bit northward, actually decently north, about 6 handles north. They're about 22.5 a year ago, and then they ranged all the way up to about 27. That looks like that came in late August, early September, and then they kind of vacillated around. They sold off and actually hit their low, listeners, of 1590. Looks like that was actually fairly recently because we're at 1632 right now. So yeah, we're at right off the 52-week lows out here. It's kind of been a lot of peaks and troughs up here over the past year, spiking up to 24, then down to 18, and back up to 24 in January, and back down to 19 or late January. So it's been a lot of vacillation, and now we're moving straight to the downside. So I'm going to guess probably going to see some puts on the tape, and that does appear to be the case out here, including a big chunk. One of the bigger single individual equity option prints going up today is here in Guess, doing nearly 12,000 of the June 14 puts, going up for 28 cents. These were pretty much a dime wide, 25 cents at 35. Going up for 28 right off the open, or I should say off the bid on the Philly. These are opening as well. Earnings are on the 6th, so coming up pretty soon. So this looks like maybe someone coming in to take advantage of a little bit of the old earnings risk premium to get a little bit extra juice, taking 28 cents. And if they have to pick up the stock at 14, that's roughly almost 2 handles below the 52-week low. And actually, they're getting it below that because, of course, they got it for nearly 30 cents. So I'm guessing this might be the old rock lobster line in the sand, and they don't mind buying the stock shy of 14 for 12,000 contracts worth, at least. Mr. Meatball, is that what you think as well?
That is what it appears to be. Kind of an income play, go for, about a 2% yield. And yeah, line in the sand. I think that's probably what it is.
Your wife loves all these retailers. Is Guess one of the ones you pay attention to?
I don't know. What do you think of Guess, Lauren? What do you think of Guess?
Your wife's there too? Is everyone's there right now, just on the show?
She said no.
No Guess love. Interesting. Okay, maybe that's why they're at the 52-week lows.
That could be it.
All the trendy fashionistas are saying nay to Guess, so that could be a sign that perhaps dark waters loom ahead. Either way, our friend here saying no. And he's going to get 28 cents to do it, nearly 12,000 times. Let's see. You know what we're going to do? We're going to make that one a to-be-watched candidate. We shall come back to him, and we shall see if he crosses his line and if he gets his stock, or if he doesn't. We shall see. And then we'll keep Mr. Sebastian's wife in the loop. All right, let's keep on rolling here. DocuSign. I don't think we talked about this one on the iBlock before. This is, of course, that online document signing company. It's all kind of in the name there. One of the few names that is actually expressive for what they do. Ticker symbol DOCU, D-O-C-U, trading off about $52 off 4 handles. They're nearly over 7%. Not a good day here for DocuSign. This is the name a year ago was trading not that far from where it is right now, about 54.5, so roughly $2 and change north of where it is right now. Then it rallied up very shortly after that in early mid-June, up to 64, so it was substantially higher. And it hit its 52-week high of around 68 and change in the mid to late August period. Then it kind of sold off pretty hard right after that, down to about 40 again in early October, and kind of bounced around that range for a while before rallying again in January, beginning of the year, up to 57, 58, threatening 60. And then kind of has been bouncing usually in the mid to high 50s, I should say, ever since then until now, when it's kind of in the sell-off range down to about a little bit shy of 52. So interesting stuff out here. What did our Eye of Sauron find for us today? Oh, no puts. It was actually calls. It was the June doubles coming in 6,010 times. I love these allotments. Obviously, probably 10 lots sitting in the book they had to take down. Something along those lines. Going up for 152 and some other funky bits, maybe on some splits there. This is actually through the offer. They were at 130, at 145. He said, I'm going to get them all for $1.52. Kind of got to do that thing sometimes, listeners, when you want to get a little bit of size. On a name that doesn't do a lot of size traditionally, this one was opening over there on the Philly. They also have earnings on the 6th, so there is a little bit of earnings juice built into this one as well. So this looks like it could be the old, this didn't go up late. Could have had a stock leg, so that could be also as a result of why the price is a little bit funky. When you get those weird splits, usually probably is a stock leg lurking, so it could have gone up with stock. But $1.52, well through the offer. Earnings coming up, sir, 55s. So that's pretty much close to where we are right now, a little bit north of it, obviously today's sell-off notwithstanding, and it's a decent way away from this 52-week high, which is about 68. So, Mr. Meatball, you think this is someone harvesting the risk premium and getting a good fill, or is this someone you think rolling the dice on some upside between now and earnings?
I'm gonna guess it's upside. This is a name that moves around a lot, and that's kind of the way I think this thing sets up.
Speaking of setting up, we got our last name here. Good old TGE. This is TGE. This name is... Hold on while I pull that up. There we go. That's better. This is Tallgrass Energy Lp. And trading today, 23.80. But we're not talking about today for this last one. We're actually going back to the dark days of January 31st. To be precise, when we first profiled these below the bid, looked like a line in the sand, pretty aggressive line in the sand, puts here in TGE. So on the 31st of January, we profiled about 5,000 of these July 22 half puts going up for around $1.50, $1.45 actually. These are below the bid. They were a dime below the bid. The bid was already 30 cents wide, and they hit 10 cents below it. So they had to do it to get those done. They were a little bit late, though, so that could take into account the price. And speaking of price, ever since this trade went up the end of January, the stock's kind of bounced around a little bit. Like I mentioned, right now, it is at right around 23.80 or so. So we're north of that 22 half level. It has threatened it a few times. It's gotten down to like 22.90 or so and bounced a few times, 22.80, and then bounced 22.77 and then bounced. So we have threatened that 22 half level, but we have not broken it. And it seems like, at least for the time being, these puts are safe. They are indeed still open. Pulling it up right now, 15,000 total of these puts traded back on the 31st. So that lot we saw, that block of about 5,000 was just 1/3 of the overall volume. And that's pretty much the big trade, at least ever since. A couple hundred have traded here or there ever since, but pretty much not a lot going on. And there still were 15, almost 16,000 open as of a few sessions ago. And coming into today, they are still open. So a lot of interest, open interest, I should say, in these puts. These things were trading, what were they at? They were at 33 cents not too long ago. So it looks like they have come in a wee bit since this trade went up. So our friend could probably take a good chunk of them off and be looking pretty good. But maybe he does indeed want to pick himself up that stock. If that's the case, then he's still a bit of a ways away. He's got about a handle and about 30 odd cents for it to go. But interesting stuff. We'll keep an eye on these when they expire. But a little bit of an update here. These below the bid Tallgrass Energy puts don't appear to have come to fruition. At least not. At least they're working out. At least they appear to be for our friend. Let's, speaking of things that are going on and maybe some money working your way, let's see if we can get some of that as well with a little bit of the old strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, listeners, this is the portion of the week where we turn to the father of the last son of Krypton, a.k.a. Trey. Trey, one of the questions we get, and I know Uncle Mike, I joke, he spends all of his days doing this one thing, which is trying to find ways to pay for puts, or in some cases, maybe finding ways to make that initial outlay for hedging a little bit less daunting, a little bit less expensive. I'm sure if you calculated up all your time on the strategy desk over there, I'd say a good portion of it probably would be devoted to this topic as well, which is probably why you chose it for today. So, Trey, when folks call you up and say, hey, I like this hedging idea, but it's kind of expensive, what do you say to them, sir? How do you counsel them?
Yeah, it's a great question. It definitely does come up a lot, and came up last week. So the Lost Emperor and I had the joy of teaching a hedging class at the end of this week, and hedging, a topic that we talk about a lot. But we noticed the questions that we're getting on this were a little bit different than usual. So a little bit less of the how many contracts do I need to buy, to more of the how am I going to help reduce the costs of this? And it makes sense. We talk about hedging when the markets are going up and volatility is at low, and truth be told, most investors aren't really thinking about it until a little fear starts to come into the market and put the strategies on. So, just wanted to talk about just some of the pros and cons of some of the different ways that you can, think about hedging strategies and help you offset the cost here as well. I always bring up too, when you're thinking about hedging, one of the first questions you should ask is you just think about your outlook here going forward. Am I comfortable actually keeping risk exposure on? Many cases, if you are extremely concerned, might be a warning for you that you have a little too much exposure. Might be thinking about potentially exiting a position, or at least reducing your risk level to a level that you're comfortable with. But on to the put strategy. So our most common, as we all know, either going to be buying a long put on either a proxy for your portfolio or on an individual position. And most clients we talk to tend to like maybe that's slightly out of the money. But when we see these volatility spikes, those begin to become a little bit more expensive. One of the first things that I'd bring up too, just think about your strike selection here as well. In that sometimes, right, that may be your preference, but you may be willing to go a little bit further out of the money, or at least a little bit more near term in terms of expiration to help with lowering the cost. Now, there is some obviously drawbacks to that. If we go too far out of the money, although that premium is less, we're really still taking a lot of risk on our underlying position. If you're someone that maybe has that high, pain threshold, you're okay to take that, a little bit of a loss until we get down there. And maybe you're really buying that put for disaster type protection, right? Hey, I'm really only concerned if we get to that, catastrophic type black swan events. Looking at something out of the money, a little further out of the money could be beneficial to you. We have obviously lower deltas there, so we have much less exposure. If we actually get down to that level again, we're going to be staring at some big losses. We want to make sure we're comfortable with that. But it is adding a floor to our position here as well. So kind of the next one that is probably the more often looked at is actually going into a bear put spread, right? So the idea here is, hey, we're buying a put for our protection, maybe slightly out of the money, but to help offset that cost. And we're simultaneously selling a put at a lower strike here for us. So that premium that we're bringing in is going to help offset, the cost. We're going to also offset some of that theta decay from the long side. But we're also going to lose some of that benefit from the vol spike here by offsetting our vega on those contracts here as well. The big thing here is we are limiting our hedge ultimately. So if maybe you're expecting that somewhat of a shorter type drop, maybe you're not too concerned about that overall disaster or black swan type of event. This can make sense for you because you do have that cap to the downside. And the good part about this strategy too, though, it is very customizable, right? We can, expand our strikes here in this case to maybe find that happy medium of where we're getting the most protection we think we need and bringing in enough premium to offset some of that cost as well. Next one that'll come up here as well is callers, right? So we have many of our investors that we speak to on the strategy desk, right, are long individual stocks or and maybe thinking about hedging off a couple of those. Find that buying the put, again, a little too expensive, but rather than, maybe looking at selling that lower put, they want to go ahead and sell a call against it instead. We have a lot of these clients who are already used to covered calls, so kind of combining the two ideas here as well. So some downsides to the caller, due to our volatility skew, we likely end up maybe actually paying a small debit to put this on and just reducing it. Many of us like that idea of that no-cost caller, but to actually do that, that put might have to be pretty far out of the money or a call pretty close to out of the money. With this one, what I always like to remind people of is, with this trade, right, you are giving up that upside potential here for that. So you have to be comfortable with that. We're giving up upside potential. We're protecting ourselves from the downside. We have to remember, what are we still trading for at this point? Does it still make sense to actually have this trade on? Do we just need this protection for a given event? If not, perhaps it's another situation. I find a lot of times when you go into the caller, maybe the exit strategy becomes the right situation here as well. So last one I'd like to bring up here too, that we do get a lot of questions on here as well, is actually going long calls on volatility here. And as we all know, the idea behind this, if the market begins to sell off, what happens with volatility, right? Begins to spike here. Maybe not as much as we've seen, on this most recent move, but just pulling kind of a recent example here on May 6th to May 9th. Took a look. The VIX went from just under 13 to about 23 in this short period of days, right? An 85% increase. Over this period of time, the S&P dropped 3.5%. So we get these much larger, percentage swings, and investors want to try and capture that by, buying calls on a particular VIX future contract to capture that. So, it can be an interesting way to hedge the portfolio. With this one, it can be a little bit more complex here. One of the main, drawbacks of this type of trade is that, many times, right, our volatility can actually come back, begin to fall without the market fully rebounding here, right? And very close to what we've seen here lately. Right? I mentioned, VIX at 23, we're at 19, but the market's actually sold off a little bit here since then. Which doesn't mean you can't do it, but this is a trade where I think timing becomes absolutely critical, right? Entering this trade at the right time and exiting at the right time is going to help out your success rate this as well. But if you are trading those log calls on VIX products, right, having that great understanding of the futures curve here and the different VIX futures out there is going to be very critical to that. So, there's a few thoughts on some of the different ones here as well. As always, there's no, I'd say, right way in any given situation. But if you find yourself, running through the idea of putting a hedge on, finding it too expensive, perhaps look at some of these other strategies to fill that particular need, and always take into account, if I'm hedging, do I want to still maintain that long exposure, or maybe is it time to actually think about my exit?
Yeah, that's a good point about the exit. We always talk about optimal collar construction, and we could have discussions for many hours on that single point alone. And yet, if you're thinking about collaring, maybe it is worth considering whether you do want to actually keep the position on. Uncle Mike, some might say, I have said myself, only half jokingly, that this is kind of how you spend your days. You spend your days trying to get protection for your clients and then trying to find ways to pay for it. So when your clients call you up and they're like, I like this hedging idea, but it's a little pricey, what do you tell them, sir?
Send the bill to Sebastian. He'll pay it.
Ah, that works.
That's the first.
I like that.
But then when that doesn't work, I want to talk just to kind of add a little bit to what Trey was saying. A very, very good synopsis of everything, Trey. But just to add a couple things to it, I want to kind of give like a Mike Tusaw op-ed on paying for using the VIX as a hedge. And so I'm not talking about what Mark and Andrew do in terms of pairing things, but what I'm talking about is, let's say you're trying to hedge your nest egg, meaning you have X amount of dollars exposed to the S&P 500, and you're concerned with a major downturn in the marketplace. So you're going to buy some calls on the VIX. I think that is a horrible idea. Reason being is that you are buying homeowners insurance to protect your boat, or you're buying boat insurance to protect your home. That's kind of the way with which I view it. They're two separate things. Now, are there ways with which they can move in conjunction with one another? Yes, absolutely. However, there's times that they don't. And if you're doing this as a trading strategy, like what Mark and what Andrew do, then I have no problem with it. I think there's a lot to it. But if you're using it as a hedge in some way, I think you're taking a giant risk. The concept of why people find this attractive is because whenever the market moves a certain amount, the VIX in theory will move more to the upside than the S&P will to the downside. So that makes this concept so attractive. However, if it doesn't happen, which we've talked about on this show many times, you might not get what you were originally looking for, and that is protection. So be very careful when using the VIX as a form of protection. The other thing that I kind of wanted to expand upon is, let's say that instead of owning the underlying as a hedge, you just buy some calls on it. Now, it's a little bit tougher to do in a market like this because volatility is a little bit more expensive, but it is still something that can be done. Oftentimes, what I like to do with it is perhaps maybe buy an at-the-money or an out-of-the-money call, but if you are doing that, I feel you need to be very active. And by active, I mean maybe sell a put spread one day when the market's down a little bit, or sell a call spread when the market's up a little bit. You're going to have to do some type of gamma scalping in some way if you want to consistently have this strategy work throughout time, in my opinion, of course. If you pick the right stock and you just buy some calls on it, then by all means, it'll work if the stock goes up enough. But over time, eventually, theta and vega can hurt you. Final thing that I want to emphasize with that is that if you are just buying calls instead of owning the stock, make sure that you have the right risk level. So let's say that you have $10,000, you're thinking of investing in a stock and you want to hedge it. Don't buy $10,000 worth of call options. Buy whatever, perhaps maybe 100 delta of call options or something along those lines that you feel that you would have, to where maybe 80 to 90% of that money that you have, or maybe $8,000 to $9,000, is still in cash. So that way it's still a true hedge as opposed to using leverage, and then you get the opposite effect of what you were originally trying to do. So ultimately, paying for puts is something that it's definitely more of an art than a science, I would say. There's a lot of ways to do it, and it's a lot of fun to talk about.
Yeah, I've often joked, not just you, Uncle Mike, but I'd say a substantial portion of the professional side of the options business, that's what their days are. It's finding ways to pay for puts. You could devote your life to that art and or science out there and never find the right answer, because it is subjective, but it is indeed a tempting challenge to a lot of people. Speaking of things that tempt us, let's get into them. Let's go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. We mentioned earlier there's a lot going on the macro front, but there still is some micro on the screens here. There are still some names popping off this week. We got today Box after the bell. It's always confusing, Dropbox, Box, all these other ones out there. But Box after the bell today. Tomorrow, we got Tiffany before the bell, if you're into the fine jewelry side of the business, as well as GameStop and Salesforce after the bell. Wednesday, we've got Campbell Soup. Good old Campbell Soup if you're into the processed foods side of the space. Vera Bradley for the ladies out there, and ABM. And Thursday, Beyond Meat. Picked up my first couple Beyond Meat patties just yesterday. I'm looking forward to trying them out for myself, as well as Ciena. So a lot of good things. And then Friday, nothing, niente out there. So not much going on over there on Friday. So if you like your micro, there still is some stuff. Of course, we have some nice earnings move results for reports for you. Still hitting up over there at the brand spanking new, theoptionsinsider.com. Still evolving, still tweaking over there. So hopefully you're liking what you're seeing over there. Speaking of what we're seeing, let's see what we're seeing. Let's go back around the horn the other way. Let's start with the greasiest of meatballs. Mr. Meatball, I know you're kind of fixated. You're watching these kind of weird vagaries of the market right now and what's going on in the ball space. What are you watching for the rest of this week until our next show, sir?
I mean, so we popped because Bullard said, hey, we might need a rate cut. And then DOJ announced, hey, we might investigate Apple. Apple was down $4. Apple was up $1.
All of that in the strategy block.
To now down $1.50.
See how much can change during the strategy block?
It's pretty unbelievable what's happening. We're getting all kinds of intraday movement, and yet still nothing. I mean, I think we have something like 9 governors speaking this week. So I think you're going to see a lot of information.
That's always a good thing. Let everyone vent their spleen from the Fed, because that's not confusing at all, right? I hate that.
I believe they're meeting in Chicago right now to discuss how to not send so many mixed messages.
Yeah, the Fed should speak with one voice. It should be on a regular schedule. Forget every other governor. That's what causes these problems. Every other governor trying to get his agenda out there, right?
They all want to be famous.
Exactly. They should. If I was Fed chairman, which would maybe be a scary thought, or chairperson, I would definitely. That'd be the first thing I would do, is clamp down on all these little leaky ships out there putting out their own agenda. But that's a conversation for another day. But still, yeah, you're right. This is crazy. Apple now in the red. It was in the green earlier today. How the worm has turned. Trey, I think you spooked everybody with your strategy block, sir. What did you do?
It wasn't me this time.
It wasn't you. All right, well, aside from scaring the hell out of Apple and everybody else, what is on your radar for the rest of the week, sir?
Yeah, a couple of earnings names to keep an eye out on the cloud computing space. Box today. CRM tomorrow. CRM, interesting one, big sell-off here today, down about 6 points, breaking that 200-day, right at its support level. Got about just under a $10 expected move on that. So see if it can actually hold and rebound, or if it continues this trend, downward. The option market, pretty interesting on CRM today. Really heavy on the calls, here right now. But let's say kind of even it out between the bought and sold in calls here. So keep an eye on that. The big news, certainly tariffs. We've got till June 10th on the Mexico tariff news. We'll be listening this week to see if we get any updates. Any updates there? Certainly be something that will be big in what we're watching here.
And Uncle Mike, bring us home, sir. What are you watching for the rest of this week into our next show, sir?
Well, it's an interesting day in that the S&P is only down 0.2% or 6 points. On Facebook's down 8.5%. So whenever you have that combination, along with silver being up like it is, weird things are happening. This is a very weird day. So I'm going to watch the weirdness, along with watching to see where we're at from the standpoint of all the tweets that are happening within the tweet trade war. And then also still watching this 2,800 mark on the S&P, seeing how long we can stay away from it. Still looks like it's been kind of a magnet number for us, and curious to see if we can make our way back to it. So a lot to watch, a lot happening. This is not boring, folks.
I don't know. I'm bored.
Well, if he's bored, hopefully you're not bored,
Check your
sir.
pulse, dude.
Hopefully you're not bored, sir, because it's your big week. On top of the big market movement, this is the big option pit palooza, sir. That's why, Andrew, you actually dragged him out of the hinterlands.
Yeah.
You got him out. So walk us through, what is the schedule for this week? And if folks still want to maybe get a last-minute seat, where should they go? What should they do?
All right. So tomorrow it begins our VIP session. That's an all-day meeting, Mark and Andrew show. We're going to have some great guest speakers talking grains, treasuries, options, bonds, VC. Then we go to a Cubs game tomorrow night. Then Wednesday morning, talking all day. And then we're going to do dinner at Gibson's. Thursday, Friday, general audience. And we're going to do education all day. Nice little happy hour series on Thursday night. Then education all day on Friday. Now, what I haven't told people is that at Gibson's tomorrow night, I've secretly replaced their meat with Beyond Meat. We're going to see whether people notice that their T-bone steak is actually plant byproduct.
You might be able to get away with it on a burger. On a bun. I don't know if you can get away with it on a T-bone that has no bone.
Not doing that. That's a joke. You're going to get a real steak.
So and our show is going to be a different time later this week, not Thursday, but actually Wednesday, correct, sir?
Yep, we'll do Wednesday, and then maybe we'll do ball views from the event on Friday if you're up for it.
Yeah, well, we have to do the show, so we'll see if I can get everyone beamed in. We shall definitely look into that. So yeah, listen, it starts tomorrow, so it's kind of down to the wire, but we can still put it out there and tweet if you want to. If you're going to be around Chicago, listeners, and you want to check it out,
it'll be worth it. Best 4 days you can spend.
Indubitably. All right, and let's go around the horn. Let's go, Uncle Mike, sir. Maybe we'll see you this week, which will be fun. In addition to that, what is taking up your what are you working on? What people want to hit you up to get these cheap puts? What should they do, sir?
Still trying to work the schedule to see if I can make it out to lunch on Friday to the event. Not sure if I'll be able to make it or not, but still trying to work a few things in. But if you are interested in working with an advisor who's likes the challenge of trying to pay for puts, by all means go to my website, stcharleswealth.com, and shoot me an email, give me a call.
All right, and last but not least, Mr. Trey, sir, if folks like what you're talking about, maybe they want to call you up, ask you about getting some cheap puts or some other things. Where should they go? What should they do, sir?
Yeah, and give us a call, 877-907-4429. Feel free to ask for me or ask for the Trading Strategy Desk team. Happy to help you out with your strategy and talk about some of the additional offerings, classrooms that we do host. You can also check us out on fidelity.com/options, learn a little bit more about our platform and some of the other interesting things we have going on here at Fidelity.
Yeah, fidelity.com/options. We'll try to figure out a way. We're doing it at a different time this week for the next show because of the live event, Trey. So we'll have to see if we can work a way. Maybe to try to beam you guys in, or if not, we'll work something else out. to get something going from you guys, maybe at the regular time on Thursday. We shall see. So, listeners, if you're in or around Chicago, you got to check it out. Come see us. We'll be this Wednesday doing the show, but they'll be doing stuff all week over there in the option pit land. You go to a Cubs game, you get a steak, you hear from people like me and maybe Uncle Mike and the Rock Lobster. Maybe I think the Flow Mash is going to be there. A bunch of people. Optionpit.com/events. Get them now. We're going to tweet out that link again right after the show's done. Get them now because it starts pretty much tomorrow. Andrew's already here. That shows you how close it is to game time. He doesn't get out of his comfort zone for anybody, so he's here. That means things are happening soon. So pretty much last day, get out there, optionpit.com/events. Put the link out for you on the old Twitters, and you can find it, register for yourself. Just go to @OptionPit on Twitter. They'll have it there as well. And on behalf of the Greasy Meatball, let's throw in the Rock Lobster because he's lurking back there somewhere. And indeed, the father of the last son of Krypton, and indeed, Uncle Mike, and myself. I thank all of you for downloading, streaming, subscribing. If you're listening live, stay tuned, get a beverage, take a snack, come back in about exactly 27 minutes. We're going to be diving into, we've been off for a week for crypto. We're back now, hot and heavy, great guest, my old buddy Campbell, formerly of the CBO, formerly of BATS, formerly of ISC, now at a new big-time crypto startup. We'll be having him on the show as well. We're talking all sorts of fun stuff. So 27 minutes, crypto run, and I'll see you back then. And then we'll see you back here pretty soon, Wednesday. Hopefully, if we can get you here live for a little bit of the old live option block. And then we'll see you back here. Other than that, later this week for Friday, for ball views, all sorts of fun stuff. Stay tuned. Crypto Rundown in a half an hour. We'll see you then.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.